Yo, 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 what's going on, everybody? We'll get started here probably about 7:05 or so. We'll give a few more people to hop on. We'll get started here in just a few more minutes. Welcome, welcome, everybody. All right, y'all. What's going on? What's going on? Excuse me. Let's go ahead and get started. As the screen says, this is going to be the last webinar before I start doing the course. Um, so this webinar, we won't really cover too much or anything like that. But what we will do is just basically spend some time marking up charts and marking up currency pairs that you all want to go over for the week. So that way I can help you all look for some nice positions and give you all just any kind of help that you all need on the charts. All right. Um, Also, I am doing a rebrand of my company, of course, which you all probably know is War 3 Associates currently. I'm changing over to Sui Generis. Now, it's a Latin term. It means basically like upper echelon, right, in Latin or Old Latin. So it's like the best of the best type thing. Give me just a second. It's like its own kind or in a league of its own. All right. That's what sui generis means. Okay. I'm probably not even pronouncing it right just yet, but that's the direction I'm heading. Now, with this rebrand, I'm focused on Forex education. Okay. So what I'll be doing with that is, of course, I'm doing this course. Like my first course or two are probably, of course, going to be like, the free or the low cost courses or whatever right now. Okay. So if you're on this webinar, more than likely you'll have it for free. If outside of this webinar, well, I would say outside the first two, I'm probably going to start charging and things like that. Because as I say, I am building a brand. What I want to do, of course, is, get some content out there to you guys that's going to get you all trading efficiently, trading along with the trends and things like that. So I've got some major things coming. I've got my member site being worked on and all kinds of stuff. But other than that, guys, like that's the direction I'm heading right now. So I'm really honed in and focused on helping as many people as I can basically learn Forex and getting them basically caught up and efficient. So let's just get right into it then, right? Let me erase this stuff. First of all, does anybody have a specific pair that they need help with or that they want to see me mark up? If you do, you can unmute yourself and just let me know, or you can type it in the chat box. It's completely up to you. You chef. All right, cool. Just keep typing in, guys. We'll probably go over all of them. So let's see. Oh, no, that's not what I wanted to do. Let me see if I can sign in real quick. I think that's it. Oh, shoot. Oh, well. Oh my gosh, what is my password? Do I even use this? What the hell? Oh my god. Hold on, guys. Let me just go back to the app. Hold on. Hold on, hold on, hold on, hold on, hold on. Jeez, it won't even do it. There we go. All right. Can you all see my screen now? Hopefully you can. Can you all see my screen? Yay or nay? Let me see. All right, cool. All right, so I think the first pair we said was odd USD. Let me go. All right, so before I mark up any other pairs or any other, basically, yeah, any other pairs, guys, especially anything that's going against or that involves the United States dollar, first thing we're going to do is, of course, check out our dollar index, right? As you see, I've already pretty much marked this up. For the most part. As you see, I've got my 3 zones marked up with the quarters theories based off different price levels where we saw rejection or a breakthrough in the market, of course, right? That's on the monthly and the weekly charts. So currently in the dollar index, we're within a zone. All right, so this line right here is a mid-level. This top black line, that's a monthly key level, right? So what we see here on the weekly of the dollar index itself is, of course, we've got bullish momentum that we see, right? And you're like, where's the momentum, or what do you see? So we've got this bullish momentum move right here, this down move against it, but immediately after this down move against it, it's pushing back up. I firmly, or I actually believe that, the dollar is going to reach probably around this 100 area. Notice this gap right here. So around this 100 area before the next big move down. Now, on that next big move down, we're going to be dealing with this bearish momentum over here. That's if it fails to break this monthly key level up here. But right now, we see that still the momentum is up, right? So what we're going to go do is go to the dollar. I mean, the daily. And I'm going to mark up most recent structure. Where did the market break through? What do I expect it to retest to? And so forth like that, right? So here's the thing, right? So the daily chart looks a little bit different from the weekly, right? In a quote unquote retail trade world, you would see this as one top. And if this completes, that would be the second top or your double top M formation. We're not going to go off of that. Okay. The reason why is because of that structure right there. All right. Or I can go up a step. I can go even further up above that and do this structure. Either or. There we go. Either or. It really doesn't matter because upon this pullback, price didn't close below that structure line. And so now we've got today, or this current bar that we're on, giving some nice bullish momentum. So what has to happen for it to be a short sale situation, guys, is today has to fail. Not only that, you might have one more push up that would fail, right? The third thing you would have to see is some heavy bearish momentum. And that momentum will have to break this blue structure line right there. So this is on the daily chart. Another one indicator that I like to use just to confirm what I'm seeing as far as which momentum I'm using or which direction to trade in is the MACD, right? If you don't know how to use the MACD, that's okay. We'll go over it in the course. But basically, you can look for types of divergence with the MACD. But basically, as we see on the MACD down here, on this current bar that's highlighted by that vertical dotted line, that dark green box is telling you that momentum is bullish, right? This line right here, the light green box, is telling you that the bulls have lost their strength or lost a little bit of power, which was yesterday. Okay. So we've got 1, 2, 3, 4 days of the bulls had momentum. They lost a little bit right here, but now they're still gaining it, right? You've also got this blue and yellow line that kind of act like moving averages, quote unquote, sort of say, right? They're just giving you an average, but they're not crossed, they're not pointing down or anything like that yet. So we've got three things that tells us basically, momentum is still bullish. We have our MACD. We've got this current bull candle that we're on up here. And then we've got on our MACD again, we've got the lines. They haven't pointed down, crossed down, or anything like that, right? So we're looking for the long situation still. So from that chart, we're going to take a look at the 4 hour and again, the 1 hour. We're going to basically see which of these three charts between the daily, the 4 hour, and the 1 hour can we recognize structure on. Okay, the clearest. I like the 4 hour because I can see structure in my Elliott waves and things like that pretty clear. I'm going to take a look at the 1 hour just to see if I can see anything a little bit better. So give me just a moment. What's going on, y'all?
What's happening?
That's funny. All right, so we can now choose basically like the 4 hour or the 1 hour. Since I found that blue structure line on the daily chart, the time frame correlation goes, if it's on the daily chart, I'm gonna go to the 1 hour. If I had marked up that blue line on the 4 hour, then of course I would go to the 30-minute chart. So I'm gonna go to the 1 hour. Now, here's what we're gonna do. basically, you know, we can mark up any kind of trend lines that we may see. Any kind of channels that you may see. What's up, Pops?
Hey, what's up?
And then basically what we're going to do again, let me change the color of these because we're on the hour chart. Change you to that. Actually, no. Jeez Louise. I like to use color-coded stuff, guys, right? So anything in that orange is obviously from the daily, this orange line's from the daily chart, the blue's from the 1 hour chart, right? So what I'm going to do now is mark up most recent breaks of structure, okay? So what I mean by that, how do you find the most recent break of structure? You're going to go with the most recent change in momentum. The most recent change in momentum is right here, or the change in momentum, which means like a trend, right? A big, heavy move. This was the trend. And then this low right here, or this high, I want to use this low since it's going down, was the break of structure. Oops, hold on, let me see. So I'm going to use this structure point right here. I'm going to use this structure point right here as well. All right. So now what we have is a few different things. What is this? Delete. We're still trading within this bullish channel, trade channel, right? But we see this change in momentum right here. It's changing direction. So all this right here, to me, until it breaks above this line or even this high, is just a retracement. Even though the higher time frame said it's, you know, it's still a long situation, right? So let's see. The daily says we're still up, right? MACD says still up, right? Now here's where divergence comes in handy. I can't draw it on my chart. Oh my gosh. All right, so it's not going to put the tool down there. But so from this peak right here, let me see if I can do it like this. Nope. So from this peak right here to this peak right here, like I said, unless today closes below these highs, current highs right now, of course, we're still looking long. That's just based off of price action. So if I'm looking to short anything, I would be foolish because it's steadily trading in within our channel, making higher highs and higher lows, right? So again, we need this high basically to fail before I can confirm it to go short. Let's see. And honestly, the 1 hour chart with this MACD shows a little bit of a divergence, which would be like a sell signal. But again, we're still within this trade channel right here, right? So until that breaks, we're still long. So this is where I guess basically have to use some patience. So my overall bias is basically long on the dollar still. So let's take a look at odd U. Oh, come on. All right. All right. So let's spend up some time marking up odd U real quick, right? This is a fresh chart. I don't have anything on it just yet. So of course, first thing I'm going to do is mark up my 3/4 zones real quick. Excuse me. Of course, I'm going off of price, right? Just a second. Let me finish marking these zones up. Okay, let's see. Hold on, guys, real quick. Oh. Hey. All right. There we go. So what I'm doing now, guys, is just the quarters theories. That basically says price doesn't necessarily move randomly. It's based on 1,000 pip movements and so forth. It's a lesson that, of course, I go over in the course and stuff like that, right? But what I want you guys to notice as I'm marking these horizontal lines up is the price settings that I'm using for them, obviously. But I also want you to look at the candles in the most recent market and how they are actually reacting to these price areas, right? So from this black line to this black line would be like 1,000 pips. This black line, another 1,000, another 1,000, right? This maroon line is the halfway or the weekly mid-range. And so, like I said, basically what I want you all to look at is how the market reacts to these price levels, right? So price doesn't necessarily move random, guys. You all have to understand that this is an institutional ballpark, right? So these institutions and things like that, they aren't necessarily trading to $1.10 and some odd pips. They're going to use nice whole round numbers, and that's what we see on the higher time frames, right? So now that we've got that marked up, what we can do here is either mark up the most recent breakup structure, or we can go to the weekly chart and do that. On this chart, this is the weekly chart. Of course, we see structure right here on the middle maroon line. That breakup structure was fairly strong. It's already highlighted, of course, by a key level. So there's no need to really mark up any kind of lines or anything like that just yet on these charts. What we can do is just mark up a trend line on the weekly chart. Ooh. I don't really like that trend line. It could work because if I drew my trend line like this, right? It's validated the whole way down, but what I'm also seeing is the trend line break. So I'm actually going to use that actually. We'll do that as red. So what I'm talking about is as validation, right, on the trend lines, or how's it set strong. So we've got a wick to this line, 2 wicks to that line. These candles bounce off that line. Kept going, close below. Came back through, but look at this change in direction right here. That kind of broke it. That's a nice strong move, but it gave it right back in this move. So here we are again, back above our trend line. So unless these candles basically get below this black monthly level, we might be looking at a possible long situation. Now, that possible long situation goes in line with a possible short situation on the US dollar from the hour chart, right? So let's just go a little bit deeper than this. So from here, I'll go actually to the daily chart. Again, all I'm doing, so let's go back to this trend line real quick. So let's say this trend line we don't like this trend line or anything like that, or we just want more validation that it's a nice solid trend line to use. Going back on the daily chart, it looks pretty good. I like it. But my thing is the current market is above that trend line and it's also above our key level down here in the black. And it also does look to be making a quote unquote double bottom, right? Which was the opposite of what we're seeing on the dollar index, which might be making a quote unquote double top. Now, for this to be a valid swing point as far as a long-term swing point, right? Or actually, let me rephrase that. In order for this to be a valid swing point or turning point, you've got to have, for my eyes, you got to have 3 points towards the low, right? That all fail. So what we have right here is one push towards the low, second push towards the low, and here's our third push that fails, right? That third push fell slightly above this middle low, which would signify, that it's a possible change in momentum or trend, especially when you've got this bearish candle that closed above this low. Above that low. And then, of course, this engulfing bearish candle that still closed above this low. So, again, this is on the daily chart. Takes a while to play out. If you're looking for an entry based off the daily chart, again, we go to the hour time frame. So before I do that, what I want to do is mark up breaks of structure right here at this low. So what we have is, oops, wrong tool. This is a structure break. Also, I want to see this structure break. I can mark up a trend line going from this high to the next lower high and all kind of stuff, right? That would be like a mini channel. I don't really much like that. So I'm just going to go to the 1 hour chart and see what I can see. Now, let me zoom out real quick so I can show you all something. as far as what I mean by swing points, right? Okay. This area over here, oh geez. Why does it not want to highlight this thing? Whatever, I'll draw a new one. Excuse me, guys. That area, this area, this area, right? Those are my 3 points as far as like the low, right? Let me go back to, I think it was the daily chart. Where have we seen this on? Y'all see that right there? Let me delete these real quick. So let me mark up a order block. That's mad crazy, dude. All right. Redefine this. Boom. All right. So that pink shaded area is an institutional order block. Okay. The reason how I know or how I got it is just I understand a little bit more than probably you all do, but it's a lesson that we go over in the course. So basically what we have, I'll try to explain it for you right now, actually. So within this area right here, right, we see this heavy push down. Okay, a pullback against this trend, and then a couple of other pushes down, right? Notice where I can actually do these right here. So those blue lines basically highlight structure, okay, or yeah, basically structure, okay. Price came down several times. Again, first push, second push, third push. Remember the 3-point swing? Remember the 3 points that I told you I recognize as a swing zone or a swing area? Here it is. First push, second push. My third push is a higher low than our middle push. And if you notice, that momentum bounced out of there. This could be quote unquote your W or your double bottom, right? But there's more to it that we're going to go over in the course. So now what we have is change in momentum that broke actually structure over here. So what this would be is the retracement, right? So we're getting ready for our buy actually. Okay. So with this being the odd USD pair and it being in the Asian session, okay, what I expect to see happen is, again, here's our swing point. We've got push towards the low, came down, push towards the low that failed. Now it's moving up, right? I'll break down this structure as well. And this is what we want to see. So what I do, or what we're now doing, since we find this structure on the hour chart, right? I'm still expecting it to pull up a little bit and retrace just slightly a little bit deeper. I could be wrong, but that's what I'm expecting, right? So from this low to that high, Our entry zone is in between the 618 and the 886. Okay. The market actually did come down actually deep enough for us to actually enter, which was the 618 and the 886. We now have in this area engulfing candle, engulfing with the break of structure, right? So let's go to the 15-minute chart to see exactly what's going on in that area, right? Boom. Look what we have here. Now, in my breaks of structure, I always say I require, 2 to 3 candles to basically break structure or close above, right? Let me go back a little bit. So in our MACD, you see that down here, right? We've got those light red bars that are shrinking or getting smaller than one another. That's letting you know that the bearish momentum is drying up. Okay. So in the real world, or what you should do, or what I actually recommend you do if you were looking for the buy signal, we should have been in as far as like a buy to catch, 30 to 50 pips on this current candle at the beginning of 7 o'clock, right? But again, we didn't look at it in time. So what we can do is wait for these current candles to basically close and then wait for the retracement. We always wait for the retracement, because what I expect to happen now, price is going to come test the bottom of this line right here from the daily. Okay, this is our break of structure that has yet to be tested. So upon that retest, there'll be some slight retracement, possibly down to this line or even to the top of this structure. Whichever comes first, you would get in for the long and ride it all the way back to up here, which could net you anywhere, but actually could net you 40 to 50 pips, depending on where you get in at, right? And if you're compounding, then that's all you really require. So now that we're on the 15-minute chart, we can start to stalk our entry, basically, right? Let me draw a couple trend lines real quick for you. Light blue, purple. Because we still have to look for a few different things, such as that trend line break of this trend line right here, right? So now upon the retest that fails to get below that blue line, so now we wait for the retrace that basically fails to break that low right there, guys, and we enter. So what I see right now is odd USD going long, actually. London, I expect it to push down one more time into this zone right here, and then of course go back long. Five-minute looks great, and that's what we want to see. So on these breaks, on these breaks of structure, guys, I'm looking for 3 candle breaks with and the candles that we want to see that break is either the engulfing or the Mars and Boo, right? Because those are some of the strongest patterns or strongest breaks, and give you nice clean sight into what the market is going to do. Are there any questions as far as odd USD or how I got the bias of going long, right? My confluence again. Let me show you guys. I'll put it all on there for you guys. It's at my fib of the 618. Okay. It's so basically at the top of my zone right here, which is the entry zone. I expected possibly one more push down actually. Okay. A strong push down into that zone, which would possibly give you a better entry or another entry if you all don't want to enter right here. I'm honestly going to wait a little bit closer to like the 9 o'clock candle, the 4 hour candle, just to make sure and confirm. Okay, because like I said, I do expect more and more push down. Um, and and as far as like a TP, if I'm going to go long, right, I could honestly hold that until about 71 cent area, if not about the 71 and a half. Okay, so the 2.7 up here and the 618 up there are my typical take profit areas. Now this would be a nice swing trade. So you would also have multiple entry points if you just followed through and held it. And of course, if you're on a swing trader, or if you're on a swing trader, I advise you, just collect your 30 to 50 pips and then get out the market, wait for another re-entry. If you're an experienced swing trader, of course, manage your trades um, and things like that. And of course, reevaluate once it does reach a ceiling or a resistance, of course, right? Um, and actually, let's say if this 15-minute candle closes like that at 8 o'clock, I would say, the next couple of candles would be a little bit bearish, similar moves to it, and then you would enter because it's still closing above our blue structure line right there. Any questions on audio? Nope, no questions yet. All right, cool. So what I'm going to do now is we'll go to you. Let's see. So is it a buy off of? That's a good question. So it is. So the way the time frame correlations work, Marcus, is I'll explain again. If we found structure on the daily, we would go to the 1 hour to look for. Okay, so let me explain this in detail. On the daily chart, we found structure or break of structure, right? That was in the buy favor. That's where we found the structure on the daily. So we go to the 1 hour to look for that buy setup. What is a buy setup? You're looking exactly at it. Okay, let me break down the anatomy of a buy setup because that was a great question. So first of all, we've got this bull run, this bull momentum that pretty much broke back into this area right here, right? So what I did is we've got this low over here, which is a structure zone. If these candles over here, of course, close up above it, we're still looking for a buy situation. Not only that, I'm looking at all of this right now is just a retracement because it is a retracement to this trend. This is a heavy trend. This is a choppy market. Heavy trend with nice momentum, choppy market, right? On these candles right here, notice the body size and the volume and the momentum they carry with them. That's letting you know that these institutions and these banks and things like that, they want to go this direction for some way, shape, or form. Because these candles on these pushes up right here, this move's killing all that, right? On this down move, this last heavy push down, this ate back everything and more. So that's your change in direction that we're looking for. So unless the current market gets actually back down below this low, you're looking for the buy situation. Okay, so you're looking for it to find a floor. Okay, so first of all, what we notice, let me zoom in a little bit. Again, I'm going to break down the swing point anatomy, right? We've got this push towards the low, this doji. We got actually a couple of pushes to the low. One push, second push, your third push, right? On this third push, you got another push, a nice strong actually push that engulfed this candle, but it failed to break this low and also this structure point over here. I'm going to look at this area over here as well on the 15-minute chart to show you what I mean. So let me mark that out for you. Okay, so not only that now, we've got this engulfing green candle that actually closed above this blue line. This next push down made a higher low, then this low, then this low, right? So now we've got another engulfing candle that's going to close above this first trend line, our inner trend line, and that blue line. It's met with our buy zone, okay, met with structure. So that's a buy model basically, guys, okay? So we go to the 15-minute chart, which correlates with the 1 hour for our entry, okay? Now, and this is how you're able to control your drawdown. This is how you're able to have better stop loss placement and things like that, okay? Because you're breaking it down chart by chart by chart that correlates with each other. And this is when we get into an advanced multi-chart analysis. This is something that I go over in the course as well. So as you see, we've got all the same markup lines from our higher time frames, right? So, and they're obviously either respected, tested, or broke through. Again, on my breakthroughs, I require 3 strong candles, right? So this high over here, this is the breakthrough. One candle engulfed the first bearish move. This candle closed slightly above that blue line. You've got a nice margin boot candle that broke and closed above this high over here. So now we have the retest that should fail to break down below actually this low right here. Okay. Honestly, it should fail to break back into this hole from this high to this low. It should fail to break back into that zone. So what we should see is on these next couple of movements down, small candles, small body candles. If we see a big candle that goes down, we want to see it wick, or we want to see it stop right above this purple shade box, right? And then that next candle should shoot the hell up out of there. Okay. So again, as you see right here on this current candle, you see how it's pulling back from that low. So honestly, like I said, at 8 o'clock, we can even go down to the 5-minute chart, okay, and get a better entry if we really wanted to. Now, this gives us a whole different look at that same area we were looking at on the 15-minute chart. So now we've got this engulfing. Like I said, this whole low right here, if I fib from this low to this high, it's going to give me another entry zone. Right? Price gets in within that area right there. That would be your I was supposed to say prime entry, right? But notice this 15-minute chart might close as a hammer. So that 8 o'clock candle could and probably might shoot the hell up out of there. There's some news coming up, actually. I don't know. I'm not unaware of the news right now. What is that? It's just some light news. So you might see some movement up, some moderate movement up from that news, actually. But that's why, but yeah, so you can get your entry on the 15-minute chart, Marcus. Does that help you out? But we found the buy situation and the buy model from the daily and the 1 hour charts. So that means if you get in it, you can get in it from the 15-minute chart, save you on your drawdown, saves you on, it helps you proper placement on your stop loss. That way you don't make too wide of a stop loss and so forth like that, right? And all this is, guys, is just price action trading and structure. Let's see. Yes. Dre, the lines that shows if it's an uptrend or downtrend, that is it's called a MACD. It shows divergence, it shows momentum and all kind of things. So yeah, it's just a MACD. Let's see. Let's go on to the next pair, guys. UCAD. And I'll come back to AU so that way we can see how these next couple of 15-minute candles actually close. Let's see. Hey, look at this right here. UCAD. Boop. A fresh chart, guys. So again, we got to mark up quarter series, right? I'll just blaze through this time. We'll start with the 2000. Well, the 20 cents, I'm sorry. $1.20. We'll do $1.30. That's the first zone. Since price was up here, we'll go to $1.40. And we'll do one more low zone. So we'll do $1.10. And again, guys, I'm using price and price action to validate these lines, right? So looking back over time, how did price react to those price areas, right? How did the candles react to that price area or that price zone, right? Looks pretty solid. And again, this is based off of quarters theory. So let's see, $1.35. Boom, right? I like it, I like it, I like it. So we'll go to the weekly chart, see if we can mark any trend lines up. So from this high to the next high, right? We got trend line break. Okay. Automatically, I'm noticing the 3 candle breakup structure over here, right? Engulfing candle with the hammer, engulfing, close, retest to that monthly key level. Now it's getting the hell out of there. So I'm automatically thinking long, right? That's on the weekly. Let's go to the daily chart. Again, we can mark up trend lines. All right, so now we're on the daily chart. We see the trend line break of the weekly trend line right here. We see the trend line break of the daily trend line right there. We see price is still above this monthly key level at a price area of $1.30 even, right? So honestly, we're still bullish. Everything I'm showing or seeing right now Still says bullish on UCAD. What else you want to mark up? Daily chart is kind of choppy to me. Okay. So what I mean by choppiness, right? So we've got all of this right here. It kind of really hasn't traded anywhere. It's just been within a range of $1.31.5 and $1.29, right? That's the range it's been within. But we've got this momentum and this momentum to take into account or consideration, because from this low to this high, all this right here to me would be like a flag retracement. Okay. Because first of all, we've got this low and this low, that this low right here met with this gap didn't even cross. Okay. So once it met this low again, it shot up out of here, made a higher low, shot up out of here, made a higher low. Now it's shooting up out of there. Okay. So now I'm going to basically go either to the daily, the 4 hour, or the 1 hour chart to see which of those charts can I see the structure the cleanest or the easiest. Okay. Like I said, sometimes it's just not going to be clean for you guys, right? 4 hour, I can see a lot of structure up on it. It looks pretty good, looks pretty clean. Let's see what the 1 hour does. All right. So definitely not going to use the daily chart. 1 hour, it's okay, but I kind of like the 4 hour a little bit better. All right, because this whole trend right here just looks clean. Now, what I'm going to do now is just mark off breaks of structure, most recent breaks of structure. So we've got this high right here, and then of course this structure point right here. So let me mark off this structure break. Oops. Because if you notice, price is failing to get back above it for some odd reason. So we use green on the 4 hour chart. But I'm just going to mark up like my trend lines and all kinds of stuff. I still have it going up. So what we're in right now is an actual retracement, and the retracement is from this low to this high. Here's the A move down. Here's B. Now we should have a C that would come test this structure right here. All right. And you're probably asking, how do I know that's the structure that's going to be tested, right? Again, my breaks of structure comes from 3 candles, right? Here's your first candle, your second candle, your third candle. This zone has not been retested. Okay, so let me show you guys this one thing as well. Retracements, I'm not gonna say all the time, but they have kind of like a 1-to-1 move. All right. So on the A move down from this high to this low, it would be a geometrical move, basically, right? The market likes to stay balanced. That's actually a lightning bolt harmonic as well that we could look for. Not only that, if I filled from this low to this high, it will be met with our entry zone. Okay, met with our entry zone, met with our fib of 618, in between the 618 and the 886. It would have closed above this bullish trend line, and it's going to retest the top of that structure right there that hasn't been retested, right? So that's what we're quote unquote kind of looking for. So this down move would just be a simple retracement. And since it's just a simple retracement, and even it's on the 4-hour time frame, so with this being the 4-hour time frame, you could still catch a lot of damn pips. I mean, it would retrace from $1.31 down to $1.30, which that would catch you 100 pips or so. And all we need is 50 to compound, right? So since we're finding this structure again, since we're finding this structure all up on the 4-hour time frame, the chart that correlates with the 4-hour is the 30 minutes. All right. So again, if we're looking for an entry for the short, look at my MACD, right? As you see the red bars are getting brighter, bigger than one another. It's showing you a bearish trend might be happening or it's entering. You've also got your crossover of your moving averages on the MACD as well. So if we're looking for that, if we're going to enter on that short sale just to catch it down towards that box again, which as a new trader I wouldn't necessarily recommend, but like I said, you can still catch you a lot of pips, right? Look what this sell model looks like. Okay, so again, we've got the change in momentum, right? And then all this is A, B, C retracement. Okay, this momentum right here, again, I said the breaks of structure have to have 3 candles. This one has 1, 2 that broke the structure, but on this third candle, it came right back below into it, right? So if had this second candle, the second bearish candle, let me zoom in. So that way you all really see this. Get off of there. Boom. So had this second candle been a bullish candle that closed actually up above it, then we would have went long. Instead, it didn't, right? So now we've got a retracement. Break of structure, 1, 2, 3, 4 candles that close below that structure. This is a retracement. This is a retracement. So upon this next push up, if there is another push up, you'll get in short. All right. Now, the 30-minute was our entry. Let me go back to that. 4-hour, we found the structure, right? 30-minute, we found the setup. All right. The setup for the short sale if you want to take it short. And again, this short, guys, keep in mind it's just a retracement, but you can still get some pips out of it, I believe. We can enter off the 15 or the 5-minute. Okay, let's see. So on the 15, you probably notice that there's automatically a trend line break, right? Okay, and honestly, I'm about to enter short now on this 15-minute chart due to the simple fact that, well, yeah, I guess you could enter now. This retracement right here, you got the 3 swing points already. One push towards the high, second push to the high, and a lower push to the high with an engulfing candle break of structure. And so now it's getting the hell out of there, right? Also, we closed below our trend line, still below the structure line. You have this engulfing candle that broke back down below this structure right here. These next 3 candles did the same thing as well, right? So now what we have is if we did something like this, you all can see the structure now, right? That is closing below. Let's see. Where would be some targets if you all wanted to? Just to catch a few pips. Like I said, you can catch it down to about $1.31, which would give you, it's a quick 20, 30 pips or so if you hold it long enough. Because again, we found our entry on the 30-minute, structure on the 4-hour. And it's still a retracement, right? 4-hour shows divergence as well. So yeah, 4-hour, 30-minute, 15. Now see how the MACD works? Any questions about UCAD? Yes, Jerobi, that would be a very tight stop. Like I said, let me go to the stops actually. On this stop, like I said, I typically put my stops above the most recent swing point from the change of momentum. I honestly expect UCAD to give maybe one more false push up. And if it does, that would be a nice prime entry. And that push up would be met with, of course, this green structure line right there and the 382 push down. And then, of course, if you entered right in that area, you can put your stop loss at $1.31,450, which is at the 786 fib ratio. Or you can go down to the 5-minute and find some structure. And as far as structure, let's see, you've got this engulfing and these two candles right here, right? Notice how this candle pulled back and tested to the bottom of that engulfing. Purple. $1.31,4. You could put a stop loss at if you wanted to, but look how it's down. Look how it's getting out of there already, though. So I honestly don't expect it to pop up there right now. Maybe it's for London or something, but right now, no. That's crazy. Y'all have any questions yet, man? I'm glad y'all are seeing this live and stuff like that. All right. Again, let me hold on, get out of there. Get out of there. The correlating time frames, all right? Oh, Rob, man, we're gonna get you together, bro. The correlating time frames. Let me repeat this. The daily, actually, let me write it out. It's better if I write it out. All right. Hold on real quick. Hold on, guys. Just a moment. Because again, I go over like the correlating time frames and all this stuff during the course. Like this is all that I'm actually going to be teaching you all. So like this is fresh material that you all haven't seen me put out or anything like that ever. So if we find, so first of all, you've got structure, you got your setup, and then you've got your entry. Okay. These are the 3 time frames you have to mark up and identify before you enter, right? So if you find structure on the daily chart, your setups on the hour, entries on the 15-minute. You find structure on the 4-hour, your setups on the 30, entries on the 15 and the 5-minute. If you find structure on the 1-hour, your setups on the 15-minute, your entries on the 5-minute. We only trade 4-hour if daily and the 1-hour don't align. Okay. And those are the time frame correlations. Now, this is something huge, guys, that you all probably haven't even seen or heard of anything like that. But I clearly have marked up a couple of different pairs now using this entry method, and they have played out pretty well. As you see, right now, UCAD is pretty booming down. Let's go check out Odd U real quick, see what Odd U is doing, right? I think we marked this up. Look at that pin right there off that low. I kid you not, guys. Look at that pin into this fucking zone, right? We got that zone from the 5-minute fucking chart. I kid you not, guys. I do not make this stuff up. This is how powerful this stuff is. Like, yo, I cannot wait for this course. But and excuse my language, guys, I just get excited because I know that the shit I teach, like, it works, right? And it's simple. It's no indicators hardly, even though I could add a couple of moving averages on here for you guys. But my main thing is training your eyes to look for structure based off price action alone. Because the moving averages, they tend to cloud your judgment and stuff like that. Because most people tend to pay attention to the indicators and not what's happening on the price charts themselves, right? So clearly, like I said, here's probably another 15-minute chart of odd USD may give you another opportunity to enter, depending on how it plays out. But I'm expecting it to be bullish. Just letting you guys know. And on that bull move, we can honestly hold it for quite a few pips, right? Let's see. Oh, crap. Y'all couldn't even see that. Hold on. Let me go back, guys. Let me show you all what's happening with Odd U and UCAD. Boom. Y'all see my screen now, right? Yay, nay? All right, cool. Appreciate that. All right. Let's go back and show you guys. Look at Odd U, right? It's already popping up. But what I want to show you guys is this purple zone, the second purple zone, right? This one. We got that from the 5-minute chart. I kid you not. Look where we had it at. Right? So if we got this entry off the 5-minute chart, your stop loss on these entries is super tight, guys. So if you go big, you still won't lose much because your stop loss is below this low. Okay, so we've got this engulfing, this pull back down towards the low that we wanted to see fail. Okay, so now we should have another low, make another low, another whatever you want to see, but eventually still going to go up. And this is on AU, right? This is what we marked up on AU. Let's look at UCAD real quick again. Look what we marked up since we marked up UCAD, right? I said, we could have entered. That entry was, I believe, either on this candle or this candle, one of the two. Or I said we could have went short, right? This candle, we would have been in profit right now with little to no drawdown, basically. Stop loss, like I said, is up here, one of these two lines. So you could have went potentially big, but like I said, I can't make this stuff up, guys. Like, this is the stuff that I'm going to teach you guys. It's got a long way to drop, actually. So, excuse me. And that's pretty much all I'm going to be teaching you guys right now. Are there any questions before we move on to another pair? That was basically two pairs that we've marked up so far that are in our favor automatically. Little to no drawdown, and it kind of happened pretty quick, right, guys? Hold on real quick. No questions? Let's see. NZD USD is the last one we'll mark up, and you chef. Webinar. Let's see what the dollar index is doing right now. It's looking kind of ugly for the dollar index, right? Because now you've got, even though these two candles right here were pretty heavy bullish momentum, they never broke our structure line, right? And look at the MACD. It's showing you that bull run is starting to dry up. So that would be just a retracement, right? Let's go to NGD. All right. Excuse me, guys. Sorry about that. NZD USD should be in a bull run as well, similar to the previous. It's crazy. The previous pairs we've marked up as well, especially with the DXY, right? And this is why we always start out marking up the dollar index. That way we can have a better understanding of the currency that are trading with it or along with, of what they should or might do. So automatically, what I see on the hour chart on USD, on NZD USD, is we've got a nice change in momentum after the low was made, right? So after this push down, this took it all back. I think we've seen this on AU, if I'm not mistaken. So this would be the retracement with this structure. Now you're seeing a shift up out of there, but we can mark it up all the way. All right. So on the quarter theories of NZD USD, it's set up kind of the same way, but instead of a 1,000 pip range, well, I mean, I guess I could do a 1,000 pip range, but I think that would be too small of an area due to the simple fact of how broadly this moves actually. Let me think real quick. What is this right here? We're 70. We'll do this one in 500 pip movements. How about that? So from 70 cents to 75 cents. We'll make that a zone. on, let's say, UJGA and currencies that move on average more than, let's say, 125 pips on average a day, those zones will be like 2,000 pip ranges. On currency pairs that move less than, let's say, 100 pips a day, like for instance, currency pairs like this or whatever, or the lesser volatile currency pairs, you'll use a smaller range. But it's typically going to do the same thing regardless the size of the range. So just to let you know, it's just figuring out how does the market, or how many pips on average does this move. So let's do 65. Dang. And then we'll do 80. Actually, I'm going to do one more step on this one and do 60. So what we see now, well, what we're doing now is just spending a little time just to see how price reacts at those price levels, right? So as we see, we've got the breakthrough, the retest, breakthrough, retest, all that stuff. This is what we're looking for, right? So these price levels stand pretty true. Now, again, we can cut these levels in half, but I'm not going to do that because they're already a small range. For you guys' purposes, yes, I want you to do that extra step, right? So then we go to the weekly chart, and from here we can try to mark up any kind of breaks of structure that we may see if it's not marked already, or any kind of trend lines, counter trend lines, and so forth. We'll also check the MACD. We notice on the MACD, we've got our lighter red bars telling us that the momentum as far as being down is drying up. So it's found a floor. On price itself, on the price chart itself, with the candle bars, we see breaks of structure. So here's a different view of the 3 candle break of structure, right? 1 candle closed above it, 2 candle closed above it. Even though this is a bearish candle, notice the wick towards the low into the structure, and it's still closed above it. Okay, so then we've got this current green momentum bar, which is green, which is met with the crossing of those moving average on the MACD, letting you know, momentum, you're looking kind of long. Okay, this is just from the weekly chart. Now, again, we go to the daily, the 4-hour, and the 1-hour charts. Okay, see where we can find the structure the clearest. I see it clear as day right here on the daily chart, right? So what we have now is our perfect, well, not, I ain't gonna say perfect, but it's a buy model. We've got a low, well, actually, one push towards the low, second push towards the low. On this third push, notice the momentum change, right? So you've got this momentum change, after this huge push, this momentum change that came back above our structure and closed above it, right? 1, 2, 3 candle break of structure. All this is a retest. Here's our swing point, right? Pin towards the low, exhaustion. This is the low. This red bar made a higher low than this low. Now we have an engulfing candle on the daily chart, which signifies buy. If you got in on this buy, guys, honestly, you can hold this shit until like 66 cents, which would net you roughly about 70 pips if you were to enter right now, right? So since we see this on the daily time frame, okay, let me do this right here. Actually, let me use this structure right there. Since we see this structure on the daily time frame, we go to the 1 hour. That's our time frame correlation, right? Look at that structure from the red line. That's what we're talking about as far as breaks of structure. Okay, let's see. Sorry about that, guys. As you already see, it's kind of just shooting up out of there. Look at the MACD. Again, light red bars. Looks like the line should be crossing here soon, shortly. So what we're going to do here is, again, mark up any kind of trend lines that we might see that will delineate, that will help us trade in the proper direction. So we see this trend line break a structure. Okay. And it's shooting up out of there. And that's probably like a retracement, like a 382 retracement, honestly. Yep. So that 382 retracement is going to have a nice way to go. So again, you can actually hold that up to 66 cents, which would net you about 70 pips or so. At a standard, that's roughly about 700 bucks, right? Let's look at our entry. Let's just go a step deeper to the 15-minute chart to see what that entry looks like. Okay. So again, we do the same thing, guys. Markup breaks of structure. Use our fibs from the most recent breaks of structure low to the high. Pull it over. And what do you all notice? That entry comes in between our entry zone of the 618 and the 886, met with the trendline break, met with previous structure. Okay, if you want to see the MACD, look at the MACD now, right? It's telling you, yo, buy. Again, this is the stuff that I'm going to be teaching you all. All right. Any questions on NZD USD? Let's see. On NZD CAD, looking at the daily chart, is the current movement an example of the start of a third leg for entering a long on this pair? Let's check it out. Let me read that question one more time. Looking at the daily chart, is the current movement an example of the start of a third leg? If you're talking about like third leg as far as like Elliott Wave and things like that, I honestly would say it would be entering the second leg. Especially looking at the daily chart. The reason I'm saying that is because this single pause or this single bearish candle right here within this bigger much trend is just a void of liquidity. It made a void of liquidity. And also, if you notice, it only did that because it hit that ceiling, right? I mean, yeah, it hit this old floor that became the ceiling over here. So psychologically, once you see old structure is being met, right? Especially after seeing this bearish move, you see this pull up with no retest just yet. You see this move right here, you're thinking, okay, damn, let's go short. But in all actuality, it shoots up the hell out of there and breaks that structure with more than 2-3 candles, right? So all this would just be the retracement. And this retrace, like I said, was met at the top of this old structure now. So now it's recognizing it as a floor, which leaves these wicks and signs of exhaustion and this 3 candle formation. So it's getting up out of there. But for me to confirm that, I can mark it up and stuff like that. So let's see. But before I mark this up, are there any questions on the previous 3 pairs that we marked up? We marked up AU, we marked up NU, and UCAT. Haven't done UCHEF yet. Any question, guys? Questions? No? All right, well, let's keep going then. So again, guys, like I said, just mark up your quarters theories. Let's see. Actually, Darwin, this gives me a whole different view. I should have marked it up before I answered you. Give me a second. Let's mark this up. On this price scale, again, like this pair doesn't really move too much, guys. It's another NZV, so we'll probably just do half zones on this one. So we'll start from this high at $1 because of this pin right here towards it that failed. And then we'll just mark our zones going down from there. The good thing about these zones is like once you pretty much have them marked up, you don't really have to mess with them again until price breaks into an area that it hasn't been marked up. So if there's not a price above or below where the current market is, then of course you obviously want to make a new zone. And I'm going to go one more step and probably delete that top zone. Boom. Right. So those are our 3 zones. These zones, guys, for this currency pair are only 500 pips, right? Again, you can cut these in half if you wanted to, but for time purposes, like I've already kept you guys an hour 40 minutes, I'm just going to keep it how it is, all right? So you can mark up your 3 zones, go to the weekly chart, mark up breaks of structure or your trend lines, anything you can find that may help you trade in the proper direction, right? Yeah, I didn't tell you wrong. So right now we see those monthly key levels still stand pretty much true, even on the weekly chart. Go to your daily chart. Again, mark up trend lines, right? So that way you can identify breaks of structure and all kinds of stuff. So we'll do this trend line right here. And then from that second point, we'll do this trend line, right? And you see how price broke above our inner trend line. So it should be eyeing our outer trend line, right? Again, since we're on the daily chart, we can mark up most recent breaks of structure if we're able to see it on this chart, right? If not, we're going to go to the 4-hour and so forth. But automatically, I see on the daily chart that, let me get this off. Our monthly key level delineates a most recent break of structure, okay? So since we see that, like I told, like I answered earlier, we've got that. It's probably met with our 382 retracement or our 50% retracement. I honestly want to see it come down a little deeper and fail in this zone. And again, I'm going to use market geometry just to, give a little something, just so I have a visualization of where I believe the market should push down to one more time. If it does, and I'll push down at all, right? Again, because this is on the daily, so it could take a little second. From the daily, where I go to 1 hour, right? Let's delete that. So here we are on the 1 hour. Automatically, what I see or what I'm noticing is from this low to this high is the trend, right? All this would be like a flag formation, a pennant formation, whatever you wanted to say, or whatever you want to call it. Long story short, it's just a retracement. Okay, it's just a consolidation. It's just a range. Psychologically, look where we're at in previous past. Right, we are at an old support turned into a ceiling right here. Let me actually highlight that for you guys. So that way you also actually see that structure and that break. Right. So this low right there. Gosh bless it. And this is what we're looking at right here, guys, right? I can go a step further and actually use this right here. Okay. So now we've got two structured lines, which basically are going to tell you one way or the other what the market's doing. So first off, I'm going to delete that first one because I like it, but I like this line better due to the simple fact it's this break over here that we're looking at, right? So we've got 1, 2, 3 candles. That's our break of structure down. So this was the original retrace, but this push down made the higher low from this low. So now you're dealing with a low, a higher low, even a higher low, right? So this higher low is closing above this break of structure over here. Okay, look at this break of structure right here. 1, 2, here's the retest to it. 3, 4. So this is just a retracement to that zone. Okay. So if I was to actually draw my fib from this to this high, this retracement, these lows would have came in probably at our 618 neck with our structure. If I'm to draw it from this low to this high, it's probably going to be in between our 23 percentile and our 382. So let's test this out real quick. So again, from this low right here to that high, that first retracement is 382. That's a strong retracement that we'll talk about later in Fibonacci and stuff like that. But if I go from this low, it's a 23 percentile. So either way, it's still closing above that structure line for your long situation. Our MACD, we've got the red bars, they're pink, right? They're light red, telling you that retracement is basically coming to an end. So if we go to the 15-minute chart now for our entry, right? And actually, let me show you guys something about this whole flag area. Because within this flag area, within these retracement guys, there's also structure that we want to see broke as well. So let me just mark this up for you real quick. So we've got that right there. I'm going to change this to a different color. All right. This is the 15-minute chart. It's looking kind of choppy. It's looking kind of ugly. You're like, what do we do, right? What do we do? Go off the most recent break of structure in your favor of the trend, okay? So since we're looking to go long, this low, higher low, right? Let's mark off that break of structure right there. And notice this low, this low. So if these three candles or these next few candles don't get above where it's at right now, it's an invalid setup. I wouldn't even enter. Okay. And that's just it. Like, so what I would like to see is just some more momentum to the upside, or let's say we don't get that momentum yet, right? Let this next push down come down and fail. If you see it fail again, then that's your entry. So, but for right now, I'm going to wait. All right, I'm going to wait because again, this could be the swing point being created with this high, this high. This might be a lower high than the middle high. So it could, like I said, come back down, test this zone, or even come back down to test this. Let's use some. Let's use something real quick. Let's use symmetry, right? So let's say it does fail below this top light blue line and come down. As long as it fails above the darker blue line right here, you're still long. You're still, that's your zone for entry. You can still stalk that, right? Now with it being NZD CAD, you probably won't see much movement on this pair until probably about London or even New York. But long story short, I'm looking for the long situation, but I don't see it there just yet, if that makes sense. Y'all got any other questions? Looking for candle patterns on structure. Yes. I mean, that's pretty much what we're doing. We're looking for a certain pair of candle patterns met with structure. Because once we see that, we pulling up all kind of stuff. We pull up, fibs, which becomes a confluence. Your structure's a confluence. Price action itself is confluence. Trend lines confluence. The break of structure itself is another confluence, and so forth. So you begin to build that big ass list of confluence, which helps you enter the market confidently. Let's see. But other than that, guys, I mean, that's pretty much all I had for you all tonight. I just want to mark up some pairs with you guys, let you all know that, it's a rebrand coming, and all kinds of things. But the course will probably start, like I said, this was the last webinar I'm going to do as far as like this. Now it's actually time for me to get into teaching you guys the concepts and what to look for and stuff like that, and some details, so that way you all understand a little bit better. But no doubt. This was recorded, so I'll get this up on the YouTube channel and stuff like that, so that way y'all can watch it and have something to reference and study and look at until I start the class. Class will start probably, I'm gonna say not next week, but the week after. And what to expect from the course, guys. Let's just go over that real quick. So we're going to be meeting, I would say for sure, twice a week. All right. In this course, it'll last, I would say, honestly, 3 to 4 weeks, meeting twice a week for like 2 hours, kind of like we did tonight. But I'm not going to go over any kind of beginner stuff as far as, like what's a tip, what is leverage, what is margin, all that stuff. No, there's too much information already out there that you can just simply Google and get an understanding of that. I'm going to give you all the meat and potatoes, basically, right? So how do you enter? What are we looking for? Basically, the concepts that I showed you. I'm going to give you the whole technical analysis strategy. And then we're going to go a step deeper, and we're going to do like a psychological development series as well. Because again, the Forex industry, as far as looking for the trades and all that stuff, that's easy for me to teach you, easy for me to learn, right? The hardest thing about trading Forex, guys, is controlling your emotionals. So honestly, what I would recommend is start reading, books on how to control your emotions and things like that, because the more emotional and intelligent you become, the better you'll have, the better opportunity or the better chance of success you'll have in the Forex industry. Because then now you won't have to worry so much about revenge trading, greed, despair, all that stuff that comes with, winning and losing during trading. So we'll have some classes that basically help you all get your mental together and all kinds of things, because again, that's probably the most important part of everything. That's a good question. How will you know if you are invited to the class? So what I'm going to do, if you all want to register for the class, I am going to make a post in the group. I'm going to make a post on my Facebook page with a link that will basically let you all register. Okay, so keep in mind, let me understand. Let me tell you guys this. I'm giving you all this shit for free right now. In the future, this stuff ain't gonna be free, right? So I'm giving you all the opportunity. If you have somebody who wants to learn with you, bring them aboard, have them pretty much register, right? So you all don't have to do this alone. Friends, family member, I don't care who you invite, but bring somebody along for your journey, pretty much, right? Because it's free. I'm giving you all some very powerful knowledge, right? That people really right now are charging a lot of money for free. Um, so yeah, no doubt, G. So like I said, invite whoever you want to invite, old and new experienced traders. I don't really care. But this is the direction I'm going. This is the new brand. And that's really about it for tonight, guys. All right. But do you all have any other questions before we hop out here? Because I done kept you all like 2 hours now. And if you all aren't following me on any kind of social media, um, look me up, Wallace Ferragamo, and send me an inbox. That way I know who you are and that you're interested in registering for the class. But other than that, guys, you all have a great night. Check on those currencies that we marked up: AUD, UCAD, NZD CAD, and NU, right? Those 4 pairs. I know 2 of the 3 or 4 actually have went in our direction pretty quickly while we was on the webinar. But other than that, guys, hey, no doubt. Y'all have a fantastic night, right?